What up? Old Uncle 2 back with you once again. Happy New Year 2026. Let's go. It's going to be a great year, boys. No matter what the markets do, it's going to be a great year. So let's get it together. Okay, so it's been a few weeks since I've been here. You might hear it in my voice still. Was a little sick. And hey, we had the holidays. So ho, ho, ho. I'm back. And it just so happens it was a great time to take a break because we had already set you up. We had already laced you up for exactly what we were waiting for the market to do so that we could come back this year and take advantage. And it looks to me like it's setting up perfectly, specifically in the ES market. We're going to try something a little different this week. I'm going to take a break between each chart and just sort of recalibrate and switch gears. I think it might help me with the excess banter. So we'll see how it goes. Okay, so what we have here is sort of it's a hybrid looking chart of like a Wyckoff, you may remember, and then Elliott wave. This is basically lining up the phases with just being lazy and not labeling them here. This is, A, B, C, quite small, just this little capitulation area where we had the last point of support. And then D, and I think that we're hitting about to hit the launch button on phase E, be it here or here, wherever you want to call it. We'll just draw it in there. So you could draw it in here as well, I think. And then that means that what happens here would be called markup. Now, that just so happens to coincide perfectly with what we're seeing on the chart here. We see the labeled finish quality corrective to this level here. Now, of course, there is potential for this to all go to shit, and there always is, and we'll line you up with that in a moment. But for now, we have what is, I would say, a very adequate corrective wave to here. We've remained range bound, but we're still up, from that low to now 6%, which is pretty big in the ES, right? So in a perfect world, and this is what we'll have, and this is what shapes up best for Elliott wave, is that it will align properly with this markup potential. So it would end up being that we would see something like we'll just call it to here, 1, 2, and then leave these down here. We'll go up to micro, and then we'll call this another 1, 2, and we'll just leave these over here, and we'll go down to sub micro and go to white. Okay, so this is the potential, right? And then that means that we could be setting up for a very strong Q1. Now, is that a 5 for some big finished actionary wave? We don't need to worry about that right now, right? We just need to worry about the trade that's staring us in the face. It's setting up perfectly as far as the retracement to the low side here. We've got the little divergence that we like to see. We're coming back into the area of support on the VPVR. And then, of course, if we draw our Fibonacci right through the 50, perfect little tweezer bottom. Feels like along at the beginning of the week here, despite any sort of geopolitical nonsense that happened over the weekend that may or may not, I don't know what the narrative is out there, but incite people to be bearish. Potentially, I wouldn't buy it if that is the case. Now, going back to the Wyckoff, and why this is all working out perfectly in that regard, because, everybody gets all caught up, and you see I don't even label it here, and a lot of times I do the same way with Elliott wave, is that the labels come last, and they're very important, don't get me wrong, but it takes away from the heart of the theory that we're trying to understand and apply to the chart. If you just try to be very structured with the labels and you don't think about what's behind it, nobody learns the theory. That's what we teach here at WaveLab. So if you want to learn it, come understand. But just to get into Wyckoff, which isn't even our specialty really, for a moment, of course I've been studying it just as long as Elliott and just as in depth, but that aside, what we see here is people get so caught up in, the volume, we're going up or decreasing volume, that's bearish. And so many times when we're in these Wyckoff accumulation patterns or reaccumulation patterns specifically, which is what we're in here, by my estimation, is that we see a rise off of a bottom, a support, where we exhaust sellers and then supply comes into the market, but there isn't like an increasing amount of buyers. It's just that we've exhausted sellers. So the volume, price will rise quite briskly on declining volume, as we see here. But what's important to see is that the buyers stepped in at the low to defend and the support. And then we talked about here that we would expect to see another sort of like mini accumulation at the top of this, and that we would come back down and really we needed to test the meat of the supply, right? Just like we were saying here when we were waiting so long for this to come down, test the meat of this supply, same thing in a mini version. And then now over this break that we've had, we've done that. So it's another mini reaccumulation zone where we've hit the markup there, and then coming into correction to retest the top of that boundary now. But then we come back down, and as we correct and come back into this area of support, the buyers step in again. Then you have the volume, and you rise organically, briskly on low volume. Now, of course, we were in a holiday period, but that's, Anyway, so we align beautifully with the potential for the start of phase E and the second 1-2 low right here in ES. So it's beautiful. Love this chart. I feel like longs this week, risk on the ES. Where does it all go wrong? Okay, briefly. And of course, if it all goes wrong here, it all goes wrong everywhere. If it all goes wrong, it would be a, let's say, wonky sized corrective to the high. And this is where this happens plenty. So don't let my use of the word wonky throw you off, and that this couldn't potentially be the case. Is that basically we would have had a fake out, right? So while the relationship here and the look here is much better for a 1-2-1-2, we could have a sneaky zigzag to the high. We return through the support range and then reject off of it and continue the downside, and then just test the bottom of the range again. That very well could be in play. We're going to have to keep our head on the swivel because we do have those geopolitical events happening that, you never know when a scare is going to hit the market. But my thoughts are that this market has become quite resilient to these weird issues that we keep having. It's been in the last, let's say, 12 months or so. All right. So the market's becoming resilient. And in fact, maybe it's just going to throw out the whole capitulation wick and just go up. So that's it on ES. I'm quite bullish. The chart looks great. All right. Bitcoin. Not as bullish, but as I've been sitting here preparing to do this video, we've had some quite bullish price action. But as we see, we're just coming up to the top of this base channel. We'll get into that in a second. It will be important. But let's just briefly spin back to what we've been expecting. Is that essentially the expectation has been that this was, when we first started out, that maybe it was potentially a lower degree 4 of a 3. And then we basically, based on size, moved it to that it would be the 4 of the C, the blue C labeled here, right? And now, after all this time that we've yet to come make a new low, we tried, right? It's been quite, let's say, tough sledding, to say the least. We have yet to make that next low. So we need to potentially reevaluate, right? So talking about understanding the theory and the guiding principles, one of the things that we can use to guide us and just sort of help keep us on track is labels. Yeah, sure. Labels is channels, right? So we've got this temporary channel, right, that we would have drawn typically. And the minimum price expectation is that you will reach the backside of this channel. And that if you continue in the way that it's like worded in EWI, very vague and ambiguous, that if it continues too far beyond that, then you might want to look for other options. Not that there's any sort of invalidation. On the other hand, though, if we were to look at the base channel, one of the best, let's say the head educator for such a long time at EWI, Wayne Gorman, he liked to say that if you were to break the top side of the base channel formed by the 1-2, the top side in this bearish incident, bearish wave. If you were to break that side of the channel with a potential wave 4 for the larger impulse, but the base, again, this is the base channel drawn on wave 1-2, that you would probably not expect to be in an impulse anymore. And we've just done that. You know, when I first started preparing for this earlier, because I was watching football as well, little secret there, Eagles suck. Anyway, I was basically setting up for this to happen after I recorded, but we broke through and we've got a little bit of power with that breakthrough in the move. So we'll zoom in and do a little live analysis, because I haven't really zoomed in since this happened, because I analyzed Bitcoin first for all these videos. I'm sorry, for all these charts. Okay, so this is no longer a wave 4. I shouldn't say it's no longer a wave 4. It is less likely to be a wave 4 at this point. So what would it potentially be? If it's less likely to be a wave 4 at this point, what else could it be? Well, it could be something finished to the downside. I wouldn't place this into the sea here, right? Absolutely not. So we would have to have a different count, and I don't even want to get into that in this video. But it would essentially mean that we would have finished the X high where we actually have left the X. But really, if you look at the sub wave labeling, it was there, right? Because of this 3 down, 3 up that created a new high. We would actually slide it here, and it would be some sort of a zigzag to the downside. Now, that doesn't absolutely mean that, oh, hey, we're done correcting, right? Because what we could have now is an X wave. Because if we were to draw a base channel for this wave, what you want to see happen is that you want to, for an X wave, an X and a multiple zigzag should break this base channel. So while it's no longer a 4, it's now met the requirement to be an X. So essentially, we can still go down. We would just have to legislate out a count, which isn't, again, like I said earlier, not super important to me at this point. That's just labels. What about the theory? What about, are we looking at the chart that is exciting us, right? So talking volume before, we had a great low. And by the way, I want to reiterate here, and I think I've said this when we were in these areas to you guys in these videos. I know I've said it, but I don't remember if I said it in these videos, that I shouldn't say always. I never criticize acting at wave 3 extremes, whether it be like in a buy or short to take profit or to enter. So if you were trying to play for this 150K or something like that, and you're starting to enter here, why wouldn't you, right? Okay, we go up, don't take your full position. You could just add, right? Average on the way down. If it doesn't go down, you can just get in more later. I really like starting to act at 3 extremes personally. And even if I don't do it in a specific instance, I'll never criticize for it. So let's go down on the lower degree and talk about what it's going to take for this to actually be bullish. All right, we forgot to do the break between transitions to the new chart, but we'll go ahead and take the transition break to the zoomed in look. Okay, so let's talk about what this, forgetting the context, which could go either way now. Let's put it that way. Honestly, to me, the larger degree context, sort of 50-50. But at this lower degree, let's see if we can glean an edge to which direction it would go. And I'm sure that everyone's seeing this right now. We're not talking live, but I bet if you're looking at this, you're very excited. I don't feel any type of way about that just yet. Let's see if we can. What we would need to rely on for this to be bullish is that this is a leading diagonal. And I always like to say, in general, leading diagonals are quite rare. We definitely see them, right, all the time. It's like a shiny Pokemon, to do a way back call. They exist, but if you're going to count on them, I like to say they'll beat you up and take your lunch money. And when you are going to count on them, I would really like to feel good about the makeup of that diagonal in some sort of a, let's say, fairly valid way. So how can the leading diagonal be constructed? It can either be all zigzags, 1, 2, 3, 4, 5, all zigzag structure, or it can be an impulsive leading diagonal, which would be impulse 1, zigzag 2, impulse 3, zigzag 4, impulse 5. And then, of course, contracting or expanding. This would be obviously contracting. We're fine with the contracting rules here. And we're even fine with this funky wave 1 of the impulsive leading diagonal because, you know, there is a bit of overlap if you take it out of line. We're not going to do that. We're okay with this, even though there's a bit of funk here. It's not anything outside of what I would say feels good for me. But it's 1, 2, short 3, long 5, deep 2. Sort of makes sense the way that it's constructed without extended wave 3. And then clearly impulsive 3 here. That's not as clear. But then this is where it all goes haywire. This is clearly not an impulsive structure here. So online, it barely makes a new high. We could switch it to candle. Doesn't matter. You're not going to get an impulse out of this. So that is, you know, while of course this isn't perfect, this is where you start to be like, ugh, I don't know. So that is what it would rely on to be an impulsive leading diagonal. So that's why, as people were calling this out a few weeks ago in the Discord, I was just not really entertaining it. I'm not gonna put my stock into a pattern that isn't that common to start with, right? That I like to say, beat you up and take your lunch money. I love to accept those leading diagonals after the fact, not as they're playing out. But in addition to that, I'm not going to put my money into the shiny Pokemon that has a missing ear. It's got a problem. I don't know why I'm doing this Pokemon bit, but let's roll with it. Anyway, so I was just disregarding it and sort of hamming up the bear play in the Discord. But if we're going to accept that, what we would want to see after that is a sharp, deep zigzag retracement, which we did get. This was actually quite nice. This is where I thought, okay, we're going to go for the new low. We did not. So this is where I started actually giving some credence to this potential. And then out of that, we're going to want to see sort of typically a strong extended wave. Now, it's fucking about here. That doesn't mean that if we do break out of this channel that it will continue to fuck about, right? So it would need to get strong quick right at this area. However, whenever we're reaching the top of a base channel in a move that looks like it could be completing 1, 2, 3, 4, 5. Of course, the way that's structured is quite weird. Let's see. Oops. This is live analysis, boys. Haven't looked at it yet. So this, let's get to candles. We're already on hour. Okay, so why I'm measuring this is because if this is an impulse, although now that I see it, it would be 1, 2, 3, 4, 5, 1 or A. 1, 2, 3, 4, 5. 3 or C. And that would be coming out to there, from there, right around 1 to 1 on that guy. Coming up to that base channel, confluencing with this base channel. So if it does get out of here, it's going to pop at the angle of attack. Interesting. Of course, this is the price action the last 2 weeks. It's so ugly. 2 weeks plus, actually. Just the holiday price action. But yeah, so 1, 2, 3, 4, 5. We'll call this another. So it's probably something like this. Honestly, this is what, and then we'll just sideways trash A, B, C, D, E. Something like that. Y. So yeah, that could be a triangle. And what do we know about triangles is that they precede the final actionary leg in a pattern, A, B, C. So basically, you can't have a triangle wave 2. Is this a triangle? I'm not too sure. It does look quite ugly. So this would say, I would say leans toward either way, the look of it, more of a B than a 2. So We don't have any divergence here on the hourly yet. Oh, yes, we do. We have divergence relative to this. So we had a lower RSI than this spike here. Marginally higher RSI than here. Oversold. I wouldn't want to short this right now, but I know a lot of people that would. Let's put it that way. Yeah, I'm Team Bear till proven wrong, just because that's where, you know, basically, even though the count is a bit odd, we've got, we're going to go back out to the context, we've got unresolved downside. Like, this, just like that ES that we were waiting, right? We were waiting so long for it to come back down to here to test this low, because just we know the shape of things, right? We know that this wasn't very deep, so what you don't pay for in price, you pay for in time. Same shit in Bitcoin. This, you know, I know this felt bad, but it wasn't that deep. So what are we doing? We're paying in price, or paying in time. And I mean, it's a lot of price. I get it, but it just feels like, you know, we've come this deep. This is a very deep retracement. If it were, let's say, some 1, 2 or something like that, it's a very deep retracement. Very deep. Are we in log? We are in log. Let's get out of log so we can look at real terms of retracement. We'll go to 887. It's a 90% retracement. Like, it's just not very excuse me. I am still recovering. It's just not very common for for something to retrace this depth and not create a new low or challenge, like do a true challenge of the low. 90%, you could call that a challenge. That's why you get the wick that we got. But this just feels unresolved. This feels needed. I mean, you got such a nice little zone here. So as much as I wanted to go up from here, would love for it to, I just don't necessarily feel it. And usually when I am bearish, I pay for it. So I hope I do. I mean, I'm not short. I'm not short or anything. But I could be more long. Remember the advice I gave? I take my own advice, you know, added down here, right? But if we go up, we just add higher rather than lower. But it just, I mean, boys, I'm sorry. I think this rejects. Bullish ES, bearish Bitcoin. At least for now. I mean, I think we could just get a flush, get a dump out, get a dump down, just a marginally lower low, hit this box, even just challenge the low, call it good. And then we can be on our way. So that's Bitcoin. It's been a few weeks. This is a longer video than we're used to. Next, let's hit ETH BTC, because I know you guys want to talk about it, even though it's not my favorite chart. All right, ETH BTC, a chart I typically don't even chart, but I know you guys are very interested in this pairing, especially because of the new crypto treasury companies out there doing ETH, kind of like Michael Saylor does for Bitcoin, and the narratives, right? So I don't know. I wouldn't say that I would lean too hard into this analysis personally, just because there isn't a lot of trading going on between these two pairs. So I don't know that Elliott wave, mass market sentiment, necessarily applies to this chart. If the trading picks up on the pairs, then, you know, potentially I would agree with that. So I do see a pattern here forming fairly nicely, even though the waves don't sort of line up exactly how we would typically want to see them. If we take this into candlestick, you'll see here that this wick does overlap this one wick. We're allowing for that. It's fine. And in fact, we've drawn this to take the wicks into account, but we're going to look at it in line. So right to the 50. It looks to me like we have an impulsive motive wave to the low, and that we're putting in some sort of corrective. Definitely 3 off the low, and then 3 down, and now we have 3 more. So this 3 would need to sort of break out, just like the Bitcoin versus dollar wants to break out. However, we've already rejected the top of the channel. It seems like we will reject and put in a nice maybe sideways flat. This could actually be a decent opportunity for an ETH buy, right? This is a daily chart, so this is not, you know, it'll be, let's say, a few weeks to get down to this B low. Maybe this is just ETH is, if Bitcoin does go lower, maybe ETH just goes lower a little faster, or potentially if Bitcoin does break out of the channel that we were just looking at a moment ago, maybe this is just the laggard, right? So that would, I guess that would be the ideal scenario, right? So we could potentially see a nice opportunity that, just like when I say take action in wave threes, you know, when I see a potential sideways B at a low, I always like to act on those two personally, because you're trading for C, right? And I always trade for threes or C's. But in addition to that, it's like, okay, if I'm wrong, you know, obviously if I'm wrong, it's like a 3 to the downside or a 5 or something that's going to break out, then whatever, that sucks. But I always like to put myself in scenarios where in the most probable range of outcomes, like say there's 3 or 5 or 4, I have more in favor of the direction of my trade than against, right? That's why we love threes and C's, particularly like threes and C's for zigzags and impulses. But when it comes to a flat, still nice, especially again at a low. We've got a long trend of down showing exhaustion. Get in here, and if you're wrong, then it goes to the moon. If you're right, then you get to take a nice little profit. So this is what I see, though. This stands out to me. I don't often see patterns standing out on this pair because, again, it's not like a highly traded pair. It just sort of organically moves within the market. It used to be. Something like that, you know, this is what I'm expecting. And in the near term, we seem to be rejecting, you know, because it's supposed to be a weekly outlook, but hey, you know, I do what I want. It's my show. But we seem to be rejecting. In the near term, it looks like we could move to the downside, have an opportunity coming up to take it against Bitcoin at the very least. All right, let's look at moving into the last thing for the day, and it's oil. We had some geopolitical strife happen over the week. We've been waiting for this to come sort of into the region of interest that it's in now. We've got this drawn with line on the weekly to sort of, let's say, mute this COVID wick to, you know, went to zero. I like it drawn this way. I like this pull. Even if we put on wicks and we draw it, it'll be higher and lower. It sort of still comes out to the 618, or I can't remember if it's 50. I like it drawn this way. I'd like to see that this is just clearly an impulse off this low, and we've just been correcting it. With this, the intention is that, you know, this should go lower. I'm sorry, this should go higher after a corrective. I mean, it's just a picture perfect looking sort of zigzag. Like this is as far as a motive wave and counting this is quite odd. I'll give you that. Maybe it's even a B and you put in a C up here and then down. Either way, just like on the last chart we were talking about, it just is shaping up nicely to be coming into a bottom. To me, I kind of still like it as a motive, even though it doesn't count very well, just because of the relationship to this one. It's sort of like at the, let's see, if we draw it, it's like probably around the 618 the length. Yeah, like perfectly 618 the length of the potential wave A, which is sort of your second most probable relationship for wave C relative to 1-to-1, right? And then, you know, it just shapes nicely. And then in addition to that, we are sort of creating multi-pivot, multi-time frame divergence. So out here on the weekly, we've got RSI making a low here, price making a new low here. However, RSI forming a higher low. And then even internally within this last wave here, still on the weekly, we can switch time frames to do the same thing. We see that price is making a new low. RSI is not making a new low. We're not flashing green or anything on the indicators, so I don't necessarily think this is gonna pop hard tomorrow, but it just looks like this should be moving to the upside pretty soon. We're into the range of support. We haven't seen buyers step in, at least in the volume on this chart. So maybe we could capitulate down, right? And I think if we were to actually go to candles and draw this out to candles. Yeah, this is right down to, no. So the 1-to-1's right here around the MZ. You got the 618 below this sort of like support zone, which means that it probably wouldn't catch it. And then you have all this sort of pivoting around this MZ. So maybe we do like capitulate through before buyers step in. That could be a thing. But as it sits now, it just looks like it's forming a nice low. It really does. I'm expecting, you know, I would say if I had to bet, let's say on the weekly, is this low end on oil? I think maybe. That's just my take. Let's see. Let's zoom in. Just do one last take here. It's a little early call on that because we could still like sort of grind a bit lower. But let's just say within 5%, we found a low, I believe. So that's where I sat on oil. I don't necessarily. I think that the chart is dictating what's going to happen here. I don't think that unless something crazy happens, I don't think anything with Venezuela is going to make this go crazy. Because, you know, it's not like just because they have a big supply doesn't mean they have a huge capacity in the markets yet. Anyway, all right, boys, tune out.